We'll get started in just a moment or two. We want to make sure everybody who has intended to log in is able to get on before we get started. But welcome everyone. Today we'll be discussing the CDFI Fund's Rapid Response Grant Program that was announced and opened announced a while ago, but opened last week, and the notice of funding availability was released last week. We'll be discussing this very exciting funding opportunity for CDFIs and especially CDFI credit unions. Again, we'll get started in just a moment. I'll do a little bit of an introduction and then turn the microphone over to my colleagues and the main speakers for today. But we'll get started in about 1 minute. Welcome everyone. Once again, we're excited to have you participate in this inclusive webinar. We're going to be discussing the CDFI Fund's Rapid Response Grant Program, unprecedented amount of resources available for CDFIs this year, and especially we want to make sure all CDFI credit unions and Inclusiv members are aware of these opportunities. We are recording this session, so if your colleagues are not able to attend, they'll be able to check out the recording. We'll share the recording with all registrants after the presentation, and we'll also share a copy of the slide deck with you all. We're going to save some time and field questions from you all. If you do have questions and you have access to a microphone, feel free to raise your hands and we can call on you at the end of the presentation towards the question section towards the end. Of course, you can also use the Q&A tool or the chat tool, and we'll be monitoring those as well for your questions and comments. Again, we're sort of here to talk today about this unprecedented funding opportunity that was announced or opened last week. But before we do that, I do want to acknowledge that this week is also CUNA's Government Affairs Conference, and Inclusiv has traditionally had a CDFI roundtable on that Monday. So we're going to talk a little bit about that. Maybe I'll turn it over to our colleague Pablo De Filippi, the SVP of Network Engagement and Membership at Inclusiv, to talk a little bit about what we've been doing in terms of advocacy and making sure that these resources are available to you all, CDFI certified credit unions. Pablo. Pablo, you're a little muted.
Oh, now.
There you go. Yes, perfect.
Yes, so sorry everyone. Thank you, Jules, for the introduction, and welcome everyone to this call. Yes, we have been hosting this CDFI roundtable for 10 years now. Today was supposed to be a big celebration. Wish we could have done it in person with everyone, because we've really come a long way, right? As a movement, we have now 340 CDFI credit unions serving over 13 million members with collective assets of 160 billion. So that's a big benchmark, really. And we know that this year we're going to have many more credit unions coming to the CDFI sector. And just to put this in perspective, when we started these conversations at the GAC, we were just a small group of people. Last year, we had almost 200 participants, so we've really come a long way. Also, in terms of appropriations, I remember that for the longest time we were talking about 100 million, then we went up to 200 million, and then last year we were dreaming about a billion, and guess what? We have now 3 billion that the CDFI Fund is going to be making available or deploying over the next few months. So it's really been a game changer, and we're really happy that we can share these opportunities with you all. We have also been doing a lot of work with our industry partners, with CUNA Mutual Group. We started a CDFI awareness campaign that now has been joined by a number of state credit union leagues and associations. So our hope is to really build momentum and get credit unions to benefit from these opportunities, but at the same time to recognize that this could be a pivotal moment where more resources could come through if we can deploy these resources in a way that increases impact and really helps small, low-income members and minority communities. Just a reminder, we typically at the GAC ask you to include our CDFI advocacy priorities. We've been sharing that with many of you, also with our league partners and CUNA. Just a reminder that if you have plans to do some high hill visits, please include that information. We're going to be sending that out as part of this deck as soon as we finish this presentation. Let's move on to the next one really quick. Just a reminder, you know who we are, so I'm gonna go really quickly through this slide. We've been around for a long time. We are really the CDFI expert for the credit union industry. We were instrumental in the establishment of the CDFI Fund. Our advocacy work again has been critical to increase the level of resources available to our members and CDFI credit unions in general. We're also a CDFI ourselves, so we're using that platform to channel other type of resources from the private sector to CDFI credit unions across the country. Let's move on to the next one. And this is, just to put everything in perspective, right? We are looking at 3.5 billion in resources available this year. Yes, in the whole history of the CDFI Fund, right? In 25 years, the CDFI Fund has taken all that time to deploy, 3.2 billion. So we are going to put all those 25 years of deployment into 1 year of work here. So this is going to double the impact of the CDFI Fund and more than double the impact of credit unions in their communities. And now we're looking at, an appropriation of 1 billion for fiscal year 2022. So this is going to be our next, big push to make sure that the CDFI Fund is given the resources that they need to support the critical work you guys are doing in your communities. So this is the CDFI advocacy platform that we have been sharing with our network and with our partners. I invite you to take a look. It's on our website. Again, we're going to share this as part of this deck. But this is the time to be a CDFI. Thank you for your work. And now let's talk about the opportunities. So I'm going to give it back to Terry Ratigan, our CDFI guru, to take it from here.
Thanks, Pablo, and happy Monday, everybody. So we are going to talk about the CDFI Rapid Response Program. I want to start by just putting that into context with the other capital opportunities that are available this year. There is so much information coming out, and there's a real risk that, you might confuse one program for another. There are a lot of acronyms out there. So we're going to talk just a little bit about where RRP the Rapid Response Program fits into those other opportunities. Then we'll talk a little bit about the RRP application itself, and then finally help available from Inclusiv. And we should have time at the end for questions as well. Right at the outset, of course, we have to have the fine print. I'm sure all of you can read this on, okay, I'll make it a little bit bigger for you. Needless to say, we are not the CDFI Fund, and we don't speak for the CDFI Fund. So our guidance is our guidance. It does not replace or substitute for the official word from the CDFI Fund. But if you do have questions along the way, as you're doing any of your applications, if you hit roadblocks, we are here to help. And we do want to, it's oftentimes very useful to identify problems that individual credit unions are having, because if you're having it, probably a lot of credit unions are having it. And we can represent that to the CDFI Fund or wherever and try to get clearer guidance put out for everybody to benefit from. So with that said, let's go into the capital opportunities that are available for CDFIs and MDI credit unions. MDIs meaning, of course, minority depository institutions. So there are some opportunities that require CDFI certification, including what we're talking about today, the RRP grants. There are also, as you know, FA grants. There are COVID-19 recovery grants that are not yet announced. CDFIs are certification is preferred within for certain CDFIs for technical assistance grants, but it is not required. You can apply for a TA grant even if you are not CDFI certified. And for the U.S. Treasury ECIP, Emergency Capital Investment Program, CDFIs and MDIs are eligible to apply for that program. So just want to talk very briefly again about what distinguishes these programs. The Notice of Funding Availability for RRP was released officially, it was published last Friday. So you have to be already CDFI certified as of last Friday to apply. The grants are going to range from a minimum of 200,000. We're expecting the maximum to wind up something a little under $2 million. It is a non-competitive process, and we're going to talk more in detail about this. The important thing right now that I hope all of you appreciate are the deadlines for this RRP program, which is March 22nd to submit your SF424 through grants.gov and March 25th for the final application to be submitted through AMIS. Now, many of you are aware that the FA and TA grants are also open at the same time. Those open, that notice of funding availability came out about a week earlier. There's a link for more information, but what I want to call attention to is that for either of those programs, if you are also applying to financial assistance or technical assistance, you also have to submit a separate SF424 through grants.gov by March 22nd. The application date is later for those programs, but the first deadline, the all-important first deadline for the standard form 424 is March 22nd. Please be aware that these two SF424 forms are different. It's the same basic form, but they are responding to different funding opportunity numbers. So you need to submit separate SF424 forms for each of those programs. Otherwise, you will not be eligible to apply. Those of you that are already registered on sam.gov, grants.gov, everything is all set. I encourage you to don't pass go, don't collect $200, go straight to the instructions on the CDFI Fund guidance, the program guidance for each of those programs. Fill out the SF424s according to the guidance for each program and submit it as soon as possible. For those of you that are not yet registered on sam.gov and grants.gov, so this would be if you have never applied to the CDFI Fund for a grant in the past. If you have applied in the past, you should have all of these registrations. But if you have not applied, it can take up to 10 days just to get registered, 10 business days just to get registered on sam.gov. So really, we encourage you to get moving on that as quickly as possible. On the Inclusiv website, we have a few short videos just to help orient you and get you started if you have not done this process yet. We also have a longer webinar, but we're not going to go into more detail on that. Just make sure that first deadline is met. So those are the 3 programs that are open now. Just again, to place this into context, there is also the COVID-19 recovery grants that will be coming later in this year. That's $1.75 billion in funding. The program is still in development. We're expecting it either at the end of this year or early next year. Out of that 1.75 billion, 1.2 billion will be focused on minority lending institutions, such as MDI credit unions. And the final program that is about to be announced at any moment is the $9 billion Emergency Capital Initiative Program. This is through Treasury, not through the CDFI Fund itself, although CDFI certification does mean that you would be eligible to apply. CDFIs and MDIs will be eligible to apply. We will have more information and webinars on that program. It will require separate applications to Treasury for the capital and NCUA for the secondary capital plan. But today we are just talking about RRP, the Rapid Response Program. So let's get into the application itself. Again, key deadlines. I can't stress this enough. Your SF424 has to be submitted in grants.gov by March 22nd for the appropriate funding opportunity number. The RRP application itself must be submitted in AMIS no later than March 25th. Key components for credit unions for the AMIS application is an organization chart, the amount of your request, financial data for years 2017 through 2020, some compliance questions, and there are only narratives that will be contingent on your responses to certain questions, such as if less than 60% of your loan dollars in any given year in your financial data, if less than 60% of your loan dollars were made to eligible target markets in any given year, you would be asked to provide an explanation for that. Some of the compliance questions also, depending on your answers, might generate some narrative sections. But in the main, it's a data-driven application. The request amount that you are allowed to ask for, the minimum grant amount is $200,000. The maximum grant request would be the lesser of either $5 million or 150% of the total loan dollars that were deployed in CDFI target markets by your credit union in 2019. Credit unions have no reason to request less than they are eligible for, unless you really don't believe that you can handle that money, you can ask for the maximum amount permitted by the formula. The CDFI fund, and we'll go a little bit through what that process will be, will reduce the grant amounts based on available funding and your individual credit union's eligibility. Just so we're keeping this into context and our expectations in check, more than 70% of all CDFI credit unions would be eligible to request the maximum $5 million. If every one of them requested that, that would be more than $1.6 billion in requests, which is more than the total amount available for RRP funding. And we haven't even thought about what banks might need and loan funds might need and everything else. In other words, there are not going to be $5 million RRP grants. I think it's safe to say the maximum grant we're expecting is going to probably be less than 2 million. Even though it says 5 million maximum, in all probability, the maximum award is probably going to be less than $2 million. Just a note, a couple of our members, eagle-eyed members who read the NOFA and the guidance very carefully, noticed that there was a clause that said, for applicants without audit reports, the maximum award would be $200,000. Well, regulated CDFIs do not submit audit reports in this application. So we assumed that that referred only to non-regulated applicants. But just to be sure, we did submit a service request to the CDFI fund. And the word came back that yes, indeed, the $200,000 limit for applicants without audit reports, that does not apply to regulated CDFIs. Credit unions and banks are not subject to that limit. So just in case any of you, kind of panic if you see that written into the that wording in the NOFA, it will be coming out, by the way, in a frequently asked questions document by the CDFI fund if you want to see it in black and white. So what's the evaluation process? It's fairly straightforward. First off, you have to meet the basic eligibility requirements, such as being certified as of last Friday. There's a financial analysis and compliance risk evaluation. You basically have to be rated Camel 4 or higher. The CDFI fund will receive feedback from your regulator as well, from NCUA. And also, there will be a check on compliance with all CDFI reporting requirements. The step 3 is the final award decision. And finally, there is the determination of the award amount. A lot of this will depend on their review of their due diligence review of the individual applicants. For non-regulated applicants, that involves a lot more going through audit reports and the like. For credit unions, much of that, there's really 2 main sources for their due diligence review. One is the regulator and the other is the CDFI fund's own records and compliance analysis. I've got things out of order. Compliance and reporting, what you can use the funding for. You can use it actually, obviously for loan capital reserves, financial services and the like. A very interesting aspect of this grant funding, and we had been discussing with the CDFI fund the need for flexible, if there could be almost like a TA component of this. There is flexibility to use the greater of either $200,000 or 15% of the grant amount for more operating type expenses, for, personnel and the like. So there is much more, flexibility built into this fund. They didn't separate out and say there was a separate kind of TA channel for that kind of funding. They just built in more flexibility to this, what is essentially still a capital grant program. Recipients will have 2 years to fully deploy the total grant amount in CDFI target markets. Like any CDFI grant, you're expected to maintain your certification throughout the performance period. RRP grant funds will not be included or should not be included in any projections you would be doing for your financial assistance application. There are no projections in the RRP application, but going forward, this is viewed as a supplemental grant, similar to HFFI or PPC, Persistent Poverty County, where the deployment of those funds does not count to, say, an overall deployment goal for your financial assistance grant. If you're not applying for FA, or you're not doing projections, if you're only applying to this program, you don't have to even worry about that. Your performance goal will be tied to the deployment of an amount equivalent to this grant in eligible CDFI target markets. And that's all eligible CDFI target markets, not just your certified target market. So let's just look a little bit under the hood at what an application itself looks like. For those of you that have done financial assistance or technical assistance applications in AMIS, the interface looks very much the same. You access it at the same place where your FA application is, and you launch it separately. It has a very limited number of components. Each application level then that's relevant will expand, like in this one. The organization level information is where you would apply attach your org chart. The SF424 record, again, and I'm going to sound like a broken SF424 record, but once that is submitted and validated through grants.gov, it needs to be associated with your application in AMIS. Again, those of you that are past applicants, you're familiar with this process. So usually a few days after submission of your 424, it will appear in your AMIS account, and you'll be able to associate it with your application. Make sure, if you are applying to multiple programs, make sure you associate the correct SF424 for each program, for the RRP. So don't pull in your FA or your TA 424 to this application. So just be aware, the CDFI Fund, if they had their preferences, I'm sure there would be more separation in time on the calendar between these programs. Congress did not give them that leeway. So unfortunately, there is a lot of overlap here. Just be really careful. It helps if a couple of people look at it and say, yeah, we're right, we're good. Because you don't want to lose the opportunity just based on a technicality. The financial data is the most detailed part of your RRP application. But again, if you've done FA or TA applications in the past, it's pretty straightforward. It's the exact same chart that is used for FA, TA applications without the projections. So it's even easier. It's only historic data for 2017 through 2020. Again, there is a field where the application will validate that more than 60% of your lending dollars went to eligible target markets. Any years below 60% will generate the need for an explanatory narrative. There are a series of compliance questions. These are basically drop-down questions. Again, depending on your answers, some may generate brief narrative explanations. And then the final step is just the attestation and submission. So overall, it is a fairly straightforward application. There are not a lot of moving parts. It's dealing with real data, so not a lot to think about in terms of, you know, what strategy should I choose or where should I deploy the money. It's you know, pretty straightforward in both what's required and what you would be expected to do. So finally, spend a few minutes just to talk about some help that is available from Inclusiv. We have just consolidated in a single template workbook, an Excel workbook template that has the crosswalk integrated into the workbook. This is the same workbook that the CDFI Fund put out, except they had the guidance in a separate place. So we appended the guidance to show how your 5300, your call report, or if you are a cooperativa in Puerto Rico, how your regulatory report crosswalks into the CDFI Fund financial data template. Again, it's nothing that's different than previous FA and TA applications. And in fact, the historic data will be the same. There are a few extra data points for the FA or TA application, but everything here will also be applicable for the financial data part of the application if you are doing those applications as well. Please remember that these templates are merely intended as assistance, as an aid for assembling the data that must then be manually entered into the AMIS form. You cannot upload or attach this particular workbook. Most of the data, as I said, is the same. It's all the data lines are exactly the same as for FA or TA applications. Most of them can be crosswalked from call reports, but there are some lines. Again, this is the same as in past FA and TA applications. Some lines require reporting of target market share of loans and lending activities. These are the template fields, again, to help you if you're assembling this data on yourself, by yourself. Inclusiv will provide members with pre-populated 5300 data for those 4 fiscal years. Once the 2020 final data is released, which should be in about a week. So by next week, hopefully, if all goes well with NCUA's release of the data, we will be sending to members, to CDFI certified members, we'll be sending these workbooks so that you know, just for your convenience. If there are members that have submitted loan data to us for the purposes of doing their ACR reports, we will also include our calculation of their target market deployment. Otherwise, those lines will be left blank. Just as a reminder to everybody, we are providing this, you know, really as a member service based on our records and call report data. But the application, the final numbers, obviously they're the responsibility of each of the individual credit unions. You own the data. So, you know, again, if there are, if you have records that are different than the numbers that we're giving, you know, it's your responsibility to make any of those corrections. For the most part, the data we're providing, you know, we have a pretty high level of confidence in it. But if you have any questions about that process, please let us know. Again, just for timing purposes, the application is due March 25th. We are just realistically based on NCUA's schedule for release. We're hoping to get these individual pre-populated templates out to people by the end of next week. So not this week Friday, but next week Friday. Which again, it doesn't take that long to just enter the data into AMIS, so there's plenty of lead time. In the meantime, for those of you that, it is actually easy enough to assemble your own data, especially if you have, last year's application that already has the 17, 18, and 19 numbers entered. You can go ahead. The blank template will be available for all members to use as soon as we've finished this webinar today. And with that, I will wrap up. And Jules, Pablo, we can open it up and see if anybody has any comments or questions.
Thanks so much, Terry. A lot of great information and a lot of great questions coming in. We'll start on an easy note, not a question, but a comment. You guys are awesome to send us this data workbook. I love Inclusiv. We love you too. We'll start at the top. I don't think I got additional clarification, but Martha Shine was having issues logging into grants.gov to complete the SF424 documents. Without further details, Terry, do you have any, sort of first pointers there?
The grants.gov help desk, I have found in the past to be extremely helpful. So that would be my first place to start. If it requires some kind of a reset of your password or something like that, they should be able to help you with that. I would also, make sure that your sam.gov account is activated, is fully activated. So you check on the status of that. But those would be the places I would start. If you continue to have trouble again, please reach out and let us know.
Thank you, Terry. So this is a question I answered in the comments, but the question will just, for those of you who didn't see it, once you submit your SF424, how long until your AMIS application will be available to work on? My answer is the AMIS application is currently available, accessible. You can get started on that now before you submit your SF424. Yes,
one other thing, actually, before you open your application, this is the same as in FA and TA grants, and it's available in the CDFI Fund's guidance as well. Make sure you update your the total assets in your organizational profile. So when you open AMIS and you go to that first page, update the total assets before you launch your application. So that should be updated as of the end of December 2020.
Thanks for that reminder. So make sure you update your institution's assets as of December 2020 before opening the grant application.
One other note on the organizational profile in AMIS. For those of you that have not logged into your AMIS account in a while, you may notice there is a new field now for minority depository institutions. It's a checkbox. So if you are an MDI, if you're a credit union that Many of you will find that it's already been checked. If you are registered as an MDI and you're working with Inclusiv, we probably have already updated that to indicate that field. And to be considered an MDI means that a majority of your board and a majority of your members or field of membership are minority, as indicated on your NCUA profile. So if you are an MDI, make sure you've checked that. Again, when you go to your home organizational profile page, you can just click edit. That gives you the ability to update your assets. And if it's relevant for your credit union, you can indicate that you are an MDI if it has not already been checked.
Thank you, Terry. I see we have a hand raised, Pablo Caban. Apologies if I mispronounced your name, but I'm going to allow you to talk. And Pablo, if you want to unmute yourself, you can ask your question directly. Pablo? Okay, Pablo, I am going to lower your hand because I'm not hearing from you. I'm going to call on the next raised hand. We got a few raised hands now. Erla, you're on the air, Erla. You'll need to unmute yourself as well.
Hi, can you hear me?
Yes, ma'am. How are you?
Good. I wanted to know if they have the financial data already because of the last previous grants. Does that come over in the financial area, or do we have to put that in again?
Yes, you have to re-enter the information. There are circumstances. It's rare for regulated entities, but there are circumstances where even in prior year financial data has changed a little bit.
Okay.
NCUA will even issue revised call report data for prior periods from time to time. So yes, unfortunately.
Yes, the answer is no.
One more question, if you don't mind. Does Inclusiv have someone or people there that can actually look at the application for us? Because, being small credit unions, look at the application for us to make sure that everything is A-OK.
I think because of the volume, I don't want to make any promises on this call. But Erla, if you can reach out to us offline, I'm sure, generally speaking, we'd be happy to take a look, depending on the timing, but I'd prefer if you reach out to us directly about that, if you don't mind.
Thank you. You guys are great.
Our pleasure. Pablo, it looks like you had unmuted yourself. Are you able to speak?
Yes, I was trying to find out if you can revisit the item of the CAMEL compliance requirement.
That's a great question, Pablo, because I had a question about that too. And Pablo, can you just, if you don't mind, mention what institution you're with?
Cooperativa de Lajas.
Okay, gracias. Terry, do you want to clarify the CAMEL and sort of what that means, especially for our Puerto Rican members?
Right. Offhand, I don't know, but it's basically, I don't know the specifics for cooperativas, but it's a similar, and Pablo, you might be more, up to date on that particular requirement, but it's basically a standard rating on a 1 to 5 scale of, capital adequacy, et cetera, management capability, liquidity, and the rest. And what this requirement is that you need to be rated by your regulator in, one of the top 4 ratings out of 5 in order to be eligible. So if the regulator feels that there is a risk of that would affect the sustainability essentially of the lending institution, that would be that would be a risk concern for the CDFI fund. It's extremely rare. The CDFI fund has said this is a standard requirement for all CDFI grant programs. And I think they've said something like 99% of all applicants pass that level of review. So it is extremely rare for a credit union not to meet that requirement. Pablo, do you want to add anything there?
Yes, I just want to make sure that it's less than 4. It's okay.
Yes,
higher
that's
than
correct.
4.
So 1, 2, and 3 are higher ratings. Then 4, 5 would be a worse financial position.
Exactly.
Anything but a 5. Yeah.
Exactly right. Okay, thank you.
Okay, thanks, Pablo.
Pablo, the other Pablo, you're muted.
Yeah, sorry.
Inclusive, Pablo.
Yeah, just wanted to say, Pablo Caban, that in Puerto Rico you have a similar type of rating, so it would be the same. There's also an MOU between the CDFI Fund and COSEC, so they will have a way to double check on that. But from what we know about the Puerto Rico system, not many credit unions or cooperativas actually will be affected by that, right? So like Terry was saying, here in the mainland, most credit unions, 99% of all credit unions would, qualify.
Right.
Provided that they're CDFI certified at this point.
Right.
And there is, and do you guys want to mention the Thursday webinar for cooperativas?
That's right. We have the same setting is going to be, we're going to do it on Thursday in Spanish for our Puerto Rican members.
Great. Thank you, everyone. And thank you, Pablo Caban, for the question. Judy, I was just about to get to your question in the chat, but I thought maybe we could kill 2 birds with 1 stone. Judy, are you on?
Yes, I'm on.
Hi.
Hi. Hi. Hi, Terry. Hi, Jules. Terry, I have a couple of questions. Recently we're getting recertified and we're having to modify our targeted market. Is that going to play into this RRP?
No, they're, the lending reports and everything else are based on eligible target markets. So historic activity is based on eligible target markets. The way certification matters in terms of, maintaining your certification and, obviously being certified in time to apply.
Okay. And can you help me interpret when they mean financial services, what we can expend the funds for when they say checking, savings accounts, check cashing, money orders, certified, automated teller machines? What specifically are they saying? Like if we wanted to purchase some ATMs or ITMs, that would qualify as a expenditure of the funds, of the grant funds?
They're looking for lending activities in the target market.
Oh, okay. Specific lending activities.
Yeah, but when CDFI Fund says financial services, they mean the loans that you're deploying.
Okay. All right. Okay. Thank you, guys.
Thank you, Judy. Great. Next question. This is really good. We got a compound question from Winona Nava. So if you already are reporting for a financial assistance grant, these funds have to be deployed in addition to what you're required to deploy in terms of your use of funds?
That's correct. So the reporting will be on top of, in other words, if you have a past FA grant that said you were going to, deploy $10 million in your funds, and then you get $1 million from RRP and deploy them, you can't count that towards your FA goal. This is on top of your FA goal.
And would a COVID extension for deployment, and I'm assuming for an existing grant, and the use of funds, would a COVID extension impact the institution's ability to receive the RRP funding?
Oh, would it, no.
So they have an existing grant. Last year, they said we're not able to meet our.
Right. I got that. You know, again, they're going to be, you know, whether that's part of their compliance review. Their compliance review is really predominantly going to be focused on, you know, have you met your obligations, and adjusting, you know, if you've adjusted your goals, you know, you are still fully compliant. I don't know how they will take into account if any CDFI for that matter. You know, I really don't know if any CDFI says, hey, there's just not demand, we cannot do this. You know, yeah, I don't know how they would factor that in. If you said, you know, we don't have the ability to deploy that might factor into what you would be asking for. But in general, they're just going to be going on a formula basis and assuming you're going to be able to deploy it on top of whatever other obligation you have.
Yeah, and Terry, we should probably go back here. The whole genesis of this is to help create jobs in communities, right? So it's about lending. It's about making sure that CDFIs can inject more capital in their communities. So that's going to be definitely something that the fund will be paying attention to, right? Your ability to actually lend deeper, hopefully, in these communities.
Yeah.
Thank you, Pablo and Terry. What I will say, we have about 30 more questions, so I want to ask the respondents to please be concise in your answers. You can be as meandering as you'd like in your questions, however. I see, Keisha, you have your hand raised. I'm going to allow you to talk. Are you able to unmute yourself?
Hi, can you hear me?
Yes, ma'am.
Hi, Terry. Hi, Jules. Hi, Pablo. It's great to see you all. We have a quick question. So us being a very large financial institution wanted to know, and we're still working with Inclusiv to actually certify for the first year. We don't know if we're at that 60%. Is that 60% a mandatory requirement for the RRP as it is in FA and TA grants? And if we're not at the 60%, would that automatically disqualify us if we're applying currently, but we're not sure if Inclusiv has put us at that number bracket yet with our CDFI recertification?
Well, thank you, Keisha. That is a great question. So the RRP is only available to currently certified institutions. So you are not eligible. The 60% lending is the threshold for getting CDFI certified.
So Keisha, they are certified.
Yeah, we're certified.
Oh, I'm sorry, Keisha. You're talking about the annual certification report.
Annual certification, correct.
Okay, yeah,
so this is our first
it's
real annual one with you all. Yes.
I see. No, they're going. You know, the report will not be submitted in time for them to incorporate that into their analysis.
Right. Jules, they will still know the percentages though, because that's part of the financial data report. So the question is, if you have less than 60% and it shows up on that financial data, will you be disqualified? They do not say that. What they say is, and we have example, this is kind of a similar process to past FA applications and otherwise. They want an explanation. So it may be a factor in their award decisioning in terms of adjusting amounts or something like that. We don't know how they will take that information, but it should not at all be a disqualifier.
Oh, thank you, Terry. So as long as we have explanation and the institution can follow up on its explanation, it wouldn't kick us out of the application process.
That's right. That's one of the reasons why I said, there are certain contingent parts of the application that will generate the need for a narrative response, and that's one of them.
Okay, I appreciate it. Thank you, guys.
Thank you, and thanks, Terry. Sorry for my confusion there. Oops. John, I see your hand is raised. You able to unmute yourself? Sorry, John, I muted you by mistake. You should be able to unmute now. Hi.
How about now? You got me?
Yes, sir.
Perfect. Kind of off of Pablo's comment, inserting capital. These loan products are also available for what I call end users. For example, if we want to focus on car loans, consolidation loans, whatever it may be, it's not just to small businesses.
Yes, it can be any loan, anything that you offer.
Absolutely.
Okay. Yeah. Great, thanks.
Our pleasure. Okay, getting back to the written questions. We've got a few questions around reporting, so maybe I'll start with the first one. Will Inclusiv be offering RRP compliance reporting like you do for FA grant reporting? Yes, we will. It will be exactly the same. It will be a paid consulting service that we offer. With the reporting for the RRP, Terry, will it be done through a TLR or the ACR or something else? Do you know anything about how the reporting?
It's going to be a lot more similar to the TLR. They're making some adjustments to that, so we can't speak definitively. The CDFI Fund will have more information, but it's going to be very similar to the grant reporting.
And then
it will be consolidated with the grant reporting as well. They're just making some modifications to that.
Right, and so can you define, or do you know what the first year of reporting will be for the grant?
I don't know. We'll have to wait for the assistance agreement. For example, I don't know, like typically what they do, they're under pressure to process these very quickly. We don't know when they'll come out with the award announcements, but we do expect it to move pretty quickly. For a normal FA or TA award, they, let's say announce it in September, and the first performance year goes all the way through the next calendar year. I don't know if they're going to do it that way again. We'll just have to wait and see.
So for that spreadsheet that you shared, can credit unions use the data to determine the dollar amount of 2019 loans closed in CDFI target markets, which is needed to calculate 150% of the dollars as the maximum award they qualified to receive?
I hope so. That's the same data that you need to do your annual recertification report. So and your grant reporting too. Again, if we're doing that analysis for you, we will be able to supply you with those target market values. If we have not analyzed your loan data, then you would need to be able to calculate how much of your lending activities were in eligible CDFI target markets.
Thanks. So if you only operate within your target market, wouldn't all products be target market products?
If 100% of your loans went, that's a relatively rare situation. Our friends in Puerto Rico, it applies to them, but it's a relatively rare circumstance. It is possible if We do have some, they typically are smaller credit unions where, almost 100% or sometimes 100% of their loans are to CDFI target markets. If you know that to be the case, then this is a very easy application for you to do.
Thanks, Terry. And also a reminder for credit unions that most of the time your target markets for the CDFI fund and your field of membership do not align 100%. Maybe I'll try to answer this, Terry, but feel free to chime in. Why is there a deadline to apply for RRP when CDFI has a rolling application period? Well, the application period for the CDFI fund that's rolling is for certification, not for grants. Their grant rounds are, generally speaking, not rolling, usually once a year.
Yeah, and can we just say also that we were hoping that the CDFI fund was going to space out more these programs, so people wouldn't feel so overwhelmed. It didn't happen like that. The good news is that at least for the rapid response, the process is going to be a lot more streamlined. And some of the charts, as Terry was saying, are going to have that double duty purpose, right? That can be used for both applications.
Thank you. Terry, do you know when they'll announce the awards?
I do not.
If one wants to use the funds for a loan loss reserve, how does the credit union show the performance goals tied to deployment over the 2-year period? Is the performance tied to the loans that are made for?
The grant reporting is transaction level reporting. So what they're looking at, and this is one of the modifications in the TLR that will be coming out. You will need to identify loans that are, that you attribute, loans to your target market that you attribute to that particular grant. The reason being they want to separate that from the rest of your loans that will be attributed to, say, an FA grant. So even if you're using those particular funds for loan loss reserves, that's how they identify an amount equivalent to the loan and say, have you gotten up to, if you got $700,000, in your transaction level reporting, you would basically be identifying $700,000 worth of lending activities in your CDFI target markets that would be attributable, that you would attribute to this RRP grant.
Thank you, Terry. We are at time for the day, but we have a number of participants still on and a number of questions unanswered, which suggests that you all are eager to hear the answers to these questions. Terry, do you mind staying on for a few more minutes with me and our
Absolutely
audience?
not. No, of course.
That's very kind of you. Thank you. An anonymous attendee asks, can we just get our percentage of target market loans if we want to complete the financial numbers ourselves? Would the percentage of the target market deployment be the same number used for recertification every year?
Sure.
It would be, but generally that percentage changes from year to year.
No, exactly. If you have those percentages, for past years and for 2020, then yeah, absolutely. That's what you could do.
Will we need to provide a detailed budget of how the funds will be used?
No.
Thank you. One of someone from our consulting team has asked that the Rapid Response Program guidelines on page 13 and the FA guidelines on page 19, if anyone else is reading along, indicate that assets on the ORC profile page in AMIS should be entered as of fiscal year end for most recent historic year, not fiscal year end 2020. Maybe we should clarify that?
We'll clarify that with the CDFI fund. because
Yeah.
it does need to be updated.
Thank you. We will clarify with the CDFI fund. As a credit union, should we submit our call report financial statements in lieu of audited ones, or should we not submit anything at all?
What's that?
Should we, as a credit union, submit our call report financial statements in lieu of audited financial statements, or should we not submit anything at all?
No, you won't be able to upload those. You know, the application knows what type of CDFI you are. So just as with the FA grants in recent years, they can cross-validate that data directly with NCWA. So they no longer require or accept uploads of call reports.
Thank you. I was just reading some comments. So one of someone on our consulting team is very adamant that CDFIs will have 2 full years after the award announcement before their first year of reporting, since credit unions are nearly all December fiscal year end date. Then year 1 would be from award announcement through December 31, 2022. Yeah, that doesn't surprise me. It's the same as an FA award.
Yep, that would be consistent.
And then so this is about the portion of the grant that can be used for operating expenses is the greater of $200,000 or 15% of the grant.
Yes.
And can they be used only for lending related operating expenses?
That's not what it says. That's not my reading of it anyway.
Yeah.
It was much more flexible.
Thank you. Can these funds be used for direct support for IDA matching, or will this still have the same restrictions as regular grants to not be used for direct funding?
Yeah, I would kind of think that would be the case, that the same restrictions would apply, but I really have no idea on that one.
Thank you. For native CDFIs, the $25 million that must be awarded to benefit native communities, does the CDFI fund look at your CDFI fund? Does the CDFI fund look at this in their formula in the RRP grant?
I don't think that there's a mandate specifically for the rapid response, right? The monies that are coming next, where the MDI designation is going to be, important. That's where there's that set aside the 1.2 billion, but not for the rapid response.
Thank you. Yeah, just a reminder, anticipated award announcement is before September 30th, 2021, but it is subject to change with that notice.
Yeah, we're expecting it well before that.
Yeah.
September 30th is the end of the federal fiscal year. So that's always what they, they're always kind of obligated to make their award announcement no later than that. There was one year where they got to bend the rules and go beyond that. But the same will be true of they'll say the same thing for the FA grant, but they are under, pressure from Congress, and their whole reason for streamlining this process was to get the money out the door
Right.
as quickly as possible. So we are, fingers crossed. And, I think probably the CDFI fund itself, they don't know how long it will take. But I think they're going to be doing everything they can to get this out well before then.
Thank you, Terry. Going back to that question around use of funds. So, but what if the person or the credit union only applied for 200,000? Would the entire grant be able to be used for operating expenses? Yes. Wow, that's pretty good.
Yeah, that's what I mean. Like they just rather than kind of have a separate stream for a TA request and a capital request, they kind of said they using this mechanism to give that kind of TA type flexibility and building it in to the system. That's kind of the way we're interpreting it. And I think it's smart. I think it's a good way to do it.
Just a reminder for those who asked, we will be sharing slides and the recording later. So for the TM reporting for the RRP, will these numbers be allowed to overlap with our current TM reporting for other FA grants? For instance, 77% of our loans go to members in our target market. Can that be used for this RRP only for our FA? Well, I would say that, when you do a report on your FA grant, you're reporting on all of your real estate and business loans. You are sort of putting together goals for how much of the grant will be deployed to, or how much of your lending will be deployed to target markets. But yeah, maybe Terry, if you want to explain.
Yeah, FA grant goals are not expressed in percentage terms. So in percentage terms for, recertification, everything else, yes, what you've deployed out of your RRP grant will be included in your percentage calculation for your total target market activities. But for your FA grant goals that are expressed in dollar terms, you will not be able to count RRP, those, like I said, in your detailed transaction level reporting, you will have to identify the loans that are for RRP, and then everything else would be counted towards your FA goals, your quantitative goals.
Thanks, Terry. And just jumping back, Winona, you made a good point. It sounds like that ITM or virtual teller machine or automated teller machine would be an eligible use of funds under operating expenses.
Yes, it could be. There are all kinds of complications with federal funds and procurement. So, you just want to look at that, but it's entirely possible.
Thank you. Is the max amount based on 150% of qualified loans in 2019 using the 210 CDFI tract? I think it's just based on your percentages from 2019.
Your total target market, all eligible target market. So yes, it would be based on the 2015 ACS 2015 investment areas, low income targeted populations, and other targeted populations, even if they are not in your certification, even if they are not your certified target market, you can count all loans to all eligible target markets for that calculation.
Thank you, Terry. still a lot of questions. Yes, just for the person that asked, I think I clarified this on the line, so maybe this was before I did, but yes, a camel rating of 1 or 2 is preferable to a 3 or 4. So when we say higher, we actually mean lower. Higher.
Yeah, good point. Good point. Yes.
Yeah, it's sort of like golf, you know. So if you do have questions around becoming CDFI certified, maybe Terry, you can advance to the next slide. You can reach out to Jules, myself, at jhebert, there we go, at inclusiv.org. Sorry, reading a question. The 90% of payment amount to be expended in year 1, this would mean applied to something like capital reserves or LLR, correct? And separately, 50% for year 1 and 70% of award equivalent must be deployed as target market eligible loans by year 2, correct?
Wait, say this again.
Maybe we should answer this directly, but the 90% of payment, basically you have to expend 90% of the payment amount in year 1. This would mean applied to something like capital reserves or LLR, correct?
Yes. I think if I'm understanding your question correctly.
Loan LLR, of course, is loan loss reserves.
Right.
And then, yeah, you can ask us directly. It's a little complicated for this call. You know who you are. This is my first time applying for a grant in Amos. Is there a tutorial that I can view to learn how to actually get to the application? Well, Terry did share links, and we can share. I'll share those with you all to sort of get the system set up. It may not have the level of detail that you're looking for, and that is something that you can reach out to us directly, and we can answer your questions and provide technical assistance.
Yeah, there are Amos training manuals available on the CDFI Fund site. They can be sometimes a bit bewildering. The most important thing is making sure you've got your sam.gov and grants.gov set up, as well as your Amos account is fully up to date, including your DUNS number, if you are a first-time applicant. If all of that is in good shape and you just need to find out where to launch your application, we can definitely help you with that. It's easier than reading through all those manuals, but we can show you where to find it.
Yes. There's a question about what TA grant funds can be used for. We're not going to get into that on this webinar. That's a separate webinar. So please tune in. We have our webinar. You should have received an invitation 2 weeks ago. April 5th, we are having a webinar that will go into depth around technical assistance and financial assistance applications. When Pablo mentioned that the CDFI Fund is very much concerned with job creation and creating jobs, that doesn't mean that consumer lending is not eligible financial activities. They're very important. You may remember that job creators were a big talking point in Washington over the past decade. That's really what we're getting at here. But yes, of course, your business and consumer lending in the target market are all eligible and counted towards your deployments.
Well, I mean, you can make the argument that a car loan is a tool to get people to work, right?
Right.
So yes.
Absolutely. Yeah. Yes. Of course. Yes. It's not a direct necessarily connection, but as Pablo said, every loan really is going to preserving or creating someone's job in a capitalist society. It's probably too late for us to apply for the RRP, but we submitted the CDFI streamlined application in October and heard nothing. Is there anything I can do about that? That sounds like a mistake on one of the federal agencies' part. So Peggy, if you want to reach out to us directly, we'd be happy to talk about your specific situation, but that does not sound right to me.
Yes. Yeah, that definitely does not sound right. So yeah, please let us know.
Yeah, and the fund, has tried to maintain that 90-day window to get back to people when they submit applications. So if yours was submitted in October, you should have heard either from NCUA or the CDFI Fund.
Yeah, and streamlined certification applications actually are generally processed by the CDFI Fund in half the time. So once you get the approval from NCUA to go through the streamlined window, their certification turnaround is usually much faster. So anyway, yes, please reach out so that we can try and run this one down.
It's Terry. This is our last question. We'll wrap up. We've taken enough of everyone's afternoon, but thank you so much for tuning in. Our colleague begs to differ on what financial services are. See page 9 of RRP NOFA for table 3.
Yeah.
Financial services expended for providing checking, savings accounts, check cashing, money orders, certified checks, automated teller machines, deposit taking, safe deposit box services, and other similar service regulated institutions only.
I didn't want to correct you, Jules, but yes, financial products are loans and those activities. Financial services, the difficulty of, I mean, you can while they're eligible uses for funds, your reporting is still going to be based on lending, and it's very difficult to substantiate. The CDFI Fund is really wrestling on the FA side with how to deal with financial services, because it's very difficult to quantify and count financial services in a way that is meaningful. So yes, it's an eligible use of the funds. At the end of the day, you're going to be reporting loan data to the CDFI Fund, and that's the most meaningful part of it.
Well, thank you, Terry, for answering that in a way that didn't make me seem completely wrong. I think that is all the questions and comments we've had. Thank you all. Oh, we got one more question. Yeah, a second that lending is the key. Thank you all for your time this afternoon. Of course, thank you to Pablo and Terry, our key speakers for today. I will be sharing a recording and slides with everyone later, everyone that registered, and we hope to see you all for the FATA webinar that will be in the first week in April. Have a good afternoon, everyone.
Thanks, everybody.
Bye, thanks.